Well, what a year it's been. Anyone who was hoping for the market to finish the year on a high would be pretty disappointed. All those restrictions on how to celebrate New Year's Eve certainly didn't do any favours for investor sentiment. Traders got an early mark today on the last trading day of the year. The All Ords and ASX 200 fell pretty sharply, down about 1.5% each, and those losses really accelerated in the final 10 minutes. Now this is the big picture of how the ASX did this year. Back in March, it plunged 37% to its lowest level in 8 years, thanks to travel restrictions, strict lockdowns and COVID, of course. But it turned out to be the shortest bear market in history, and the speed of the recovery surprised practically everyone. Governments and central banks pumped trillions of dollars into their economies to stimulate their way out of recession. And November was a particularly strong month as the Reserve Bank cut rates to almost zero, and the US election wasn't as close as many had thought. Plus, the market got a massive boost after Pfizer, Moderna and AstraZeneca announced solid results from their vaccine trials. But the Aussie market's recovery doesn't look as impressive when compared to the rest of the world. America's tech index, the Nasdaq, led the way as Facebook, Amazon, Apple and other tech giants went gangbusters during the pandemic. New Zealand, Shanghai and India's Nifty 50 also surged in the past 12 months. We're slightly below where we started, but still ahead of the British. Now, hindsight is 20/20. If you had a time machine and plenty of cash, this is where you would have made the most money. Marley Spoon, which delivers meals to your doorstep, its shares skyrocketed by almost 1,000%, while Tesla, which is listed in the US, also surged to astronomical heights. Same with other companies which benefited from the online shopping boom like Temple & Webster, Afterpay and Kogan. Iron ore prices rose to their highest level in about 8 years, and that boosted Fortescue Metals, while the digital currency Bitcoin hit new record highs after that spectacular crash a few years ago. Meanwhile, if you bought shares in these Australian companies, you might not be so pleased. Department stores, shopping centres and travel-related stocks were the hardest hit during the pandemic. But market analysts reckon there's room for them to rebound next year if the COVID vaccines go according to plan and spark an economic recovery. Meanwhile, the Aussie dollar has surged to its highest level in about 2.5 years, and it's now around 77 US cents, which is great if you're an online shopaholic who loves buying things from overseas, but not so great if you're exporting commodities. And gold hit a record high in August, above $2,000 an ounce, but it slipped a little since then, but is still at a very high level, while the poor man's gold, otherwise known as silver, saw even bigger gains. And it wasn't a good year for oil prices, which briefly fell below zero earlier this year as fewer people are flying and driving. And that's a wrap for finance this year. Thanks a lot for your company, and I hope 2021 is an even better year for you.